And what an amazing week of data that we saw. I think that we are finally at the point where we are making the turn, and we're coming into an era where the Fed is going to have more leeway to reduce that Fed funds rate. And I think we are just coming around the corner for lower interest rates, because I believe they're going to be in the low sixes by the end of 2025. However, all of that got overshadowed with what happened abroad. Israel attacking Iran then coming back attacking Israel. Obviously, we all pray that diplomacy wins out, the loss of lives is limited, and this escalation does not go too much further, because that is not good for anybody. So let's get back to why I thought this week was a great week. And my name is Kevin Weedmark, aka The Mortgage Mouth. Please hit that subscribe button. Coming to you every single Friday with the Friday wrap up, the Monday with what is coming the week ahead, and then the most important one is the daily dose, a very quick 2 minutes of what's going on in the marketplace. So this week, the big things that I saw that I said to look out for were, number one, we had inflation pulling back. Even with all the rhetoric from the media, inflation is going to do this. We had economists on TV, blah, 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 blah. It looks like regardless of the tariffs, that inflation is pulling back. So that is an amazing thing. It opens the window for the Fed to make some moves. So that's number one. The second thing that really came in our favor is the auctions, right? The appetite for U.S. debt, it's there. Regardless that it's approaching 37 trillion, didn't seem to really wane on any traders. Came through with flying colors, beat forecasts. That was amazing. And then the other thing I said to look out for was, and what that does, it allows the ability for the Treasury issuance to be reduced. And that's a great thing for the bond market. The other thing is initial jobless claims I said to look out for. Now, while it only came in, again, it's only like 5,000 over the forecast. It is repetitively coming in higher than expected. We keep seeing more layoffs from companies. And I'm here to tell you again, the labor market is a lagging indicator of what is going on. We are going to see some kinks in that armor. That is coming, and that is going to play into the hands of the Fed and their ability to say, okay, inflation is where we need it to be. It's looking okay. I still don't think they give their first cut until September. That's looking good. The economy, it's looking a little bit slow. We can start doing some rate cuts. The other thing we saw is the consumer seems to be back. The sentiment over the tariffs and everything like that seems to be receding, which is a good thing. Although I don't put much into that, because even when things were horrible, consumers still spent. It doesn't matter. They can feel whatever they want. Americans like to spend money. Accounts for 2/3 of the GDP, and they just spend anyway. So that doesn't really faze me, that number anymore. It did for a while. Not something I'm heavily looking at. Obviously, like I said, we want to make sure that we send all our prayers. And the big thing that really, the traders move to the sidelines. If you're heading into the weekend and you're a trader, the last thing you want to be is exposed. Who knows where this is going to go, and who knows what this outcome is going to be. Is it going to be quick? Is it going to is it going to grow? Are more countries going to get involved? And then the other thing that it really did, and why we saw interest rates on Friday creep up, although we did hit 1 month lows this week, and like I said, we're making that turn. Oil is going up. Oil spiked, obviously, with this conflict abroad. Until we get somebody else to step in, maybe Saudi Arabia, that's going to increase their output, we are going to see that trickle down, the fear that that can add to pricing pressure, add to inflation a little bit, and we're all just going to have to stomach it and move through it. But again, the good news is, overall, from our standpoint, data is consistently coming in our favor. We're making the turn, and I'm more positive about interest rates being near the low sixes consistently by the end of 2025 than I have been any other part of this year. All right, y'all, have a great weekend. You need anything, a pre-approval, you want to talk shop, you want to learn how somebody in my position makes money and how it affects your interest rate, or how I can help you close more business if you're an agent out there, please don't hesitate to give me a call. I'd love to set up a Zoom or a coffee. All right, y'all, have a great weekend. You need anything, you know how to touch base with me. Cheers.